it's Jack from Jack Gately Real Estate and the Online Real Estate Academy. Let's take a look at the Plymouth single-family home market update for February 2024. And as always, we start with price. All right, so in January, your average single-family home in Plymouth sold for $682,000. That was down a little bit from $712,000, but the overall trend, as you can see here, is up where it's been for the last year or so. So as you can see on this trend, we had since March of 2020, we've been on a huge run up. And then when the interest rates hit in the summer of 2022, we had a little bit of sideways action and a little bit of lower price. But since March or February of last year, we're on the way up. So we're not quite at the highs that we were just before the interest rates, but we are close. And we're moving into the spring season, so you would imagine typically prices go back up in the spring season. Interest rates are the big variable. Let's take a look at interest rates real quick. This chart is from Mortgage News Daily, and as you can see here, we kind of hit the peak back in October, then we had a big slide into December, then a little sideways, but recently it's crept up to even just a teeny bit above 7%. So the expectations that we were going to get 6 rate cuts in 2024 have recently evaporated. And now we're looking at, well, the market thinks 4 rate cuts. I actually think fewer than that. And we'll see where that goes. Obviously, builders have found that there are plenty of buyers when rates are at 5.5%. But we are nowhere near that. Why do I say that about builders? Because builders are using lower mortgage rates to subsidize the sale of to move the product that they have, and as an enticement. Now, if you are selling an existing home, you do not have that enticement, and you have to wait for mortgage rates to dip. But as mortgage rates go down, if they do, you would imagine price would go up. So we're going to keep a very close eye on mortgage rates this year. Sellers are getting 99% of their list price. So if you listed for $100,000, you're getting $99,000. That's a little bit of a drop. The state number actually dropped to 98%, but anywhere there still remains a seller's market. Days to offer, 28 days to offer. The statewide average is 30, so this is right in line with the statewide average. We had bumped up to 40 days, but now we're back to 28. That's more consistent with the statewide averages. You always see a little bit of movement in this number, but it's in the normal range. Basically, think about a month from when you list your property to when you actually find an offer that you accept. So a little bit of patience. It's not like 10 or 12 days like it had been at some point in the past. A month from when you list your property to when you accept an offer. Supply remains continually tight. The supply on the first of the month is how we do it here. 56 houses for sale townwide as of February 1st. I know that's crazy. That's really slow, really limited supply. But we've been in this tight range for quite some time, somewhere between 50 to 80 houses. Well over a year. So that's what it is. There's not a lot of selection. And with that, we've seen a seasonal dip in the total number of homes sold, which you would expect. In fact, February is usually the lowest number, so it wouldn't surprise me if that actually dips a little bit lower for our next report. That's why they have those big car advertisements and sales in February to get people out in the dead of winter. Usually this picks up in the springtime, and I would expect to see that when we finally get into the springtime months. Looking forward, we had 47 homes go under agreement in January. And we've been somewhere around there. That's a kind of a normal seasonal slowdown. But keep in mind, we're still way, way down from when things were normal prior to the pandemic because of this giant rate lock situation that we are in. So we're going to be very eager to keep an eye on interest rates. There was the conventional wisdom that they were going to go down well into the 6s, maybe even into the 5s. That's turned around a little bit in the last week or two with additional new Fed speak. It seems like we've kind of been seesawed here and whiplashed really with that. And as interest rates go down, you would think that the number of homes that go on the market would go up, but we don't know about that. Nobody knows. That's why we do those updates. And of course, recently the Fed said there might not be as many rate cuts this year as the market had expected. We'll keep you updated. I'm Jack from Jack Gately Real Estate and the Online Real Estate Academy. Have a great day.